Hey everybody, it's CryptoBirb Adrian speaking, and welcome to today's episode of the Industrial Podcast. It's been a while. It's been a very long while since we actually had the last episodes, everybody. The market has been insane in many factors in terms of Bitcoin, in terms of crypto, in terms of also other markets. A lot has been going on. And at the same time, if you have a look, throughout certain like average market performance, there's not too much that has changed. So we are in the very interesting and very interesting position, like in terms of positioning yourself as a trader and as an investor for 2022. And today on the podcast, specifically to talk about 2022 outlook, I have my good dear friend Scott Melker with me, and yeah, let's hear some stuff from Scott Melker. Scott, how is it going? How are you doing?
Things are great, man. Thank you so much for coming back. I think last time we did this, my name was Burb's #1 fan at the bottom instead of Scott Melker, but I forgot to
Yeah.
make a joke this time.
I think this was on some sort of like a live stream that we were both on. I
Yeah,
think, yeah,
exactly.
this was yeah, this was pretty funny. About the podcast itself, we decided to kind of like bring back the podcast format, because simply of the entire group of people that had some sort of like emerged over the past months in terms of crypto, but also outside crypto itself, right? You are a perfect example of that. I've been definitely paying a lot of attention to all your beautiful content that you produce on a daily basis, also with your podcast, also with the newsletter, and the overall daily market outlooks. And I decided, Scott, that you are the perfect fit as my great friend and as my great friend, as a person who I truly admire for many reasons, to actually get back as the number one kickoff kickoff guest, kickoff professional that I want to well hear some market updates from. So why don't we start from saying, or revealing how's 2022 been treating you so far? 20 days has passed.
It's been a rough start to the year, I would say, all around. I think that's true for markets. Obviously, it's true for COVID. Regardless of your beliefs on COVID, it's certainly impacting our daily lives. Um, we've had trouble even like managing to keep the kids in school because the teachers get sick and the classes are shut down. So I would just say, on a personal level, I think for most people, it's probably been very trying and largely disappointing. And the market has sort of tracked that real life sentiment, both stocks, Bitcoin, and other cryptos. Otherwise, so I would say it's been a rough start, but it's important to also note it's, as of right now, January 21st. Right, we've got over 11 months left, and a lot can change. Especially in the Bitcoin market, it can change in a day, but a lot can change in a year. And so I'm still very, very optimistic and hopeful that things will be much, much better in the coming months.
Yeah, I agree. And the way I started, started off this podcast was by saying, that at the same time a lot has changed, but frankly speaking, if you have a look at the average performance, just take Bitcoin for an instance, right? Then it's been flat for over a year, like on average performance, right? Average performance in terms of like moving averages. So it just seems to me that we are some sort of like stuck, and it seems that the community as a whole, the crypto Twitter, seems to be stuck as well in their own some sort of like decreasing sentiment, worsening sentiment. Like, how are you taking that?
Yeah, I think that's the nature of markets. In fact, December 4th, we had this big drop from 53 down to around 42. My immediate reaction was, we're going to be here a while. Everyone was looking for a major bounce or something to happen. And I said, that was a major move to me. That was sort of like a local bear market confirmed, right? Because we had this higher high at 53 and that was violated. So for me, it was just, we're going to go sideways. And I sent a series of tweets sort of right around that time where I said, we'll probably test the top of it, 52. People will be insanely bullish at the wrong time at resistance, and we'll inevitably go down to the bottom of it, and people will be insanely bearish. And everything in between is going to drive them insane, and sentiment is just going to become extremely negative. It's almost like when you have certainty, even if it's to the downside, people can tolerate it, but it's the uncertainty that markets hate and that
Yeah.
people hate that drives them really crazy. So I would almost say that we seemingly had worse sentiment when we were just above 42K than when we dropped below it, right? It's because people start to
Yeah.
actually capitulate their emotions to some degree. But yeah, my feeling is that we're just sort of consolidating. Seemingly 42K has become Bitcoin's natural home, right?
Yeah.
On January 8th, 2021, the market topped at 42,000, right? The big run from 23,000, 20,000, new all-time high. We were all exuberant, going to 100. And then we had, weeks and weeks and weeks of consolidation. Tesla buys Bitcoin and we break 42K and rock it. Well,
Yeah.
that's been the key level that we've traded around. Listen, we got much higher. We got to 69, but we also went down to 28. And it seems that equilibrium is just 42K, right? Right now,
Yeah.
that's sort of the fair market value of Bitcoin. Yes, we're trading below it now, but only by a couple $1,000s. And I'm not saying price goes sideways at 42K. I'm just saying that seems to be sort of the median level that Bitcoin wants to trade at. So like you said, it's just sort of this long, long period of ranging and consolidation if you really zoom out.
Yeah, yeah. It's pretty interesting because well, of course, I agree with everything you said so far. It's been pretty interesting from my end, in terms of observing, how human emotions actually act, and they take the lead. I think one of the very good instances and examples was one of the comments that I found on my tweets, and one of them said that well, it wasn't proper explanation, it was my explanation for my take on the ranging. I called it five-fold range bound fractal, as in we had range across every time frames, right? And there were people like saying, no, this is not a sideways, this is bear market, right? For me personally, the bear market needs to have a confirmed downwards trend. While we hadn't been in downwards trend, we have been in sideways, quote unquote trend, right? Sideways tendency ever. Like we've been swinging back and forth, just like I said, just like you said, playing some sort of like a ping pong, table tennis between the floor and the ceiling, back and forth. And yet to many people it seems like it's already been a bear market for some time. And the explanation that one of the reply guys just gave in the comments was that, listen, for you it's sideways, but for me I've lost a lot, it's a bear market for me, right? And this is actually like how like it was a very explicit visualization of how human emotions just take the lead, and it's not rational anymore, right? The sentiment has made the market like extremely pessimistic, and this just goes on and on and on. It takes days, months, and already a year. So if we were, Scott, to perhaps get some charts of yours on
Sure.
the screen, we could perhaps hear again some of your thoughts about Bitcoin, about other markets that you also want to discuss, because there's definitely been going on a lot outside, on the stock side, on the commodity side, and whatnot. Let's give it a quick look over your chart, shall we?
Sure. And I want to comment on something you just said, that user. And I feel that, right? Every markets are very personalized because it doesn't really matter what a chart says if you've lost all your money, right?
Hmm.
And so, of course, for that person, as kind of sad and scary as it is, it's very true for them. And I've always joked that even in the past, like you'll have alt season, but like everyone's experience where seemingly everything is popping off, but yours aren't. So like everyone's screaming alt season, you're like, it's not alt season for me
Yeah.
because I'm holding this coin and it's done
Yeah.
nothing, right? And it's all about patience and perspective. But like I said, and I should say this very clearly, right? You just said, I think we've been kind of chopping sideways. I wouldn't really say a bear market confirmed, no confirmed downtrend. Very important for people to realize, every technical analyst has their own definition of bear and bull market signals, right? For some, it's higher highs, higher lows, or lower highs, lower lows, right? That confirm those structures. That's fair. Everybody, there's plenty who say it's a break of a key moving average, right? Because that's sort of your reversion to the mean. But more importantly, I hate the terms bull and bear market in general because they have to be so time frame specific and nobody specifies, right?
Right.
So here's a monthly chart of Bitcoin, right, that we're looking at right now. From
Mhm.
2000, this is a ascending channel we've been in since April of 2013. All higher highs, higher lows, until now. Every single time that this EQ, this dash line, has been flipped here, went to the top, flipped here, went to the bottom, flipped here, retested top, flipped here, bottom, perfect channel, flipped here. This is the first time I've been using this chart all over that we didn't make it to the top and seemingly are breaking down this channel, right? But either way, no matter how you look at this, this is a bull market, a massive ascending channel on a large time frame with higher highs and higher lows, right? So yes, is Bitcoin in a bull market? Literally since the beginning of time, right? Is the Dow Jones in a bull market? Literally since the beginning of time, right? Yeah. The Great Depression was the greatest buying opportunity in history when you zoom out on a Dow Jones chart, right? In fact, you know what? To make my point, here, I have this chart that I had made once upon a time with all of the stock market crashes labeled on it. And for some reason, the chart is not pulling up at the moment, but I'm assuming it will. I don't know what's going on. There you go, right? This is the stock market since inception in the 1890s, right? Here's 1901, 1907. Here's the Great Depression. Yeah, really, really bad, but not when you zoom out and look even 10 years later or 20 years later and down the road. And there's every single opportunity that people have called the massive bear markets, stock market's going to zero, everything's going to collapse. You can look at Bitcoin the same way, right? You're just in this massive ascending pattern, higher highs, higher lows, bull markets, right? Bull market. So time frame matters. Let's look at the weekly on Bitcoin, right? Let's look at the weekly. If let's say that we take the lows from 28 right here, right? I'll do this visually so you can see, right? We had a low. Oh, that didn't work at all. I don't know what just happened. Low. Let's call that a high, higher low here. And I don't know, higher high, something like that, right? That this is this sort of bull run that we've had. So this higher low now has been violated. If your line was 39,600. For me, we had this more important pattern, high, low, lower high, lower low. So this was sort of a bearish trend, obviously. And that was broken at 53K when it finally made right here, when it made the higher high. Broke this higher low. This was actually, let me correct. This was the higher low right here. That was broken at 53K, right? Now we lost that. This is when I said, okay, if you're looking at it locally, we've entered a local bear market below 53 and we'll probably range from 42 to 53. I view all these black lines as ranges, 20 to 28, 28 to 42, 42 to 53, 53 to 69. You don't have to overthink it. You trade whichever range you're in, right? So we'll see if we break out of that one or not. But now this to me sort of, being Friday, January 21st, this is the line in the sand at 39,600. Yes, we've technically broken it and made a lower low. But if we see a weekly or daily closes starting above that line, they become bullish SFPs, tons of liquidity, and a real chance we could go up. I mean, to be totally transparent, when it hit 38,000, I took another long. Why not? Right? Why not? Easily violated if we go lower. And I was long from 39,800 on this last drop and closed it above 42 and, made some money on a bounce. But so my opinion is locally that we entered sort of a local bear market below 53. And now that's accelerating below 42. Right. And so that puts 28 in play. Right. If for some reason we break 28, then we can start talking about going all the way back to the 20,000 all-time highs of years before. But there's literally no rational reason for me to say that below until we could go that low unless it actually happens, right? Unless we break the next level. I think people just get so consumed with how high can it go and how low can it go that they don't just look and see, like I said, and like you said, this is 42,000, right? I mean, this slide right here. That's where we've been for the last year, right? True. In some variation, we always seem to come back to it, right? And people are panicking. We're oversold on almost every meaningful time frame. We've got all these MAs way up ahead. If you trade those, like we're going to revisit the 50 MA on the weekly. We will. It might take a few weeks, but we're going to get there. That could be down at 44, 45 by the time it happens. It's going to happen, right? Agreed. And so I think that people just are in a full panic and they see these things. Listen, if I was a whale, I would be absolutely breaking this level and then buying, right? Because everyone screams bearish market structure, lower low, it's over, it's dead. That was everyone's line. Whales know exactly what they're doing and they know how to move this market, right? That's and listen, we've had stocks. This is stocks, right? I mean, this is SPX topping at 48.20 or so. This is today. Perfect bounce off the 200 MA. And this was doom 2 hours ago. Like 2 hours ago, everyone was saying stocks are finished, stocks are over. I'm not saying they'll go over up here. I'm just saying the 200 MA does not get violated often on the daily on a stock chart. You
True.
can see how high we've been trading above it this entire year, for the entire past 2 years since the crash in 2020. This is the first retest since June of 2020. Stocks don't just die. Stock market doesn't just go straight down. Even if you believe that we're going into an extended bear market, it's not going to all happen today, right? And people just need to zoom out and chill and realize it. Listen, I bought a fat bag of Solana today. I've been trying to find an entry on Solana and failing for longer than I can remember. I had almost bought some when Sam sent his famous $3 fuck off tweet. And for some reason I didn't. And then I admit, like, it continued up, and I was at some point, I was like, I'm just not going to buy this right now. There'll be some bear market eventually. Well, yeah, I bought it at 116 here because this to me is a very clear line in the sand. This is an investment, and I will continue. Solana, I want to own in 5 years, and I've known that for a long time. Now I'm building an investment in Solana. If it goes down here, I'm not going to stop out at 114 because I bought at 116. I will happily buy lower if it continues down to these levels. Something that Peter Brandt said to me on a stream once on a podcast I had him on. He said, I tell my children, buy a good company. You know, he's talking about stocks, obviously. He said, buy a good company, then hope and pray that it drops 50% so that you can buy some more. Right? And I don't think that's the vision that most people have in crypto because they're trying to get rich quick. But that's the truth. If you think that something is fundamentally valuable, you should be licking your lips at the opportunity to buy it lower. People will buy literally anything in the world when it's on sale, except for stocks and crypto.
Like, this is the way to put it.
I mean, people will buy pants that don't fit because they're 25% off and be like, I'm going to lose some weight. These pants will fit me next month. No, you never wear those pants. They stay in your closet with the tag on them, but they won't buy Solana when it's 60% off the highs, you know? And so just as a long-term investor, I'm really excited about these prices, even if it goes lower. I mean, that should probably be the kicker. I mean, God, Amazon's under $3,000 right now. I've been buying Amazon, like, for my retirement auto buy dollar cost averaging for years. I'm really interested in buying some more Amazon under $3,000, even if it goes to 2, because it'll be back above 3 soon. Right. And so it's just, you do not need to time the market perfectly to be a successful trader. You don't. You just need to understand the general trend. Bitcoin, crypto, we're not dying. We're just going through a rough patch. The funny thing is, like, it was worse than this not 4 or 5 months ago. People are acting like this is some new experience. We just did this.
Yeah.
Right. I mean, May to September was horrible. Horrible. So, you know, I don't see anything to be particularly alarmed about right now, unless the entire world collapses. And then that'll be the generational opportunity, like March 2020, to buy your forever bags of everything.
Yeah. Yes. Go listen. I mean, while we are at the other markets outside crypto as well, because like all that you've been sharing so far is definitely, you know, well, first of all, something that I agree personally with, and something that that many people may find inspiring as well, in terms of how to protect themselves, you know, in terms of what's coming in 2022, right? Because this is the market outlook of 2022, and we would love to also hear, I'm sure, as traders, you know, for what your outlook is in terms of the, well, surprise quote, the rate hikes, right? Rate hikes. How do you perhaps see that, or do you have an intention to play, you know, to set yourself in some sort of like a strategy how to trade the rate hikes? Do you have like some gold investments? Like, how does it look to you?
So I always own, as much as I make fun of them and rail against them, I always own metals, and you probably should, right? I mean, gold has a multi-thousand-year history of performing well in downturns, and just because it hasn't in the last year doesn't mean it won't, right? And we all make fun of the fact that gold is basically the same price it was 10 years ago, certainly around the same price it was a year ago, but Bitcoin is now lower than the price it was a year ago, and your Bitcoin fundamentalists will not tell you that it's become a worse hedge against inflation, right? Everybody is really passionate and has cognitive dissonance when it comes to their own asset versus other assets. So I don't believe that Bitcoin is the only hedge in the world. I'm fortunate to be in a financial position where I can sort of take other approaches. I've bought quite a bit of land over the past year and continue to do so. Um, that's the hard
Very good
asset I
point.
really want, and not
I
not the
love it.
kind not the kind in the metaverse. No offense to anyone. They can make more of that. So yes, I believe having exposure to metals, to other hard assets outside of Bitcoin, very, very important. Now, as for playing the rate hikes, I'm going to be quite honest. I think that we just missed our chance, right? Like if you were going to play the rate hikes, you would have shorted stocks weeks ago, because we all know they're coming now. It should be priced in. I'm not saying there won't be some like random volatility around the actual announcements, but on a macro level, the huge move was the Fed admitting that inflation wasn't transitory. It was problematic, that we were going to see rate hikes this year, right? And so to me, the bad news, so to speak, is sort of priced in, or should be. Doesn't mean that it like we won't see drops, but it should be priced in. And what I find absolutely hilarious is that they're talking about 4 or 5 rate hikes, and we're talking about going back to historically low levels, right? It's not like they're hiking rates to 10%. They're literally going back to like the lowest levels in history right before this, right? And so like if you're buying a house, if you're buying assets, okay, so you pay 4% instead of 2.5%. You pay 3.5% instead of 2.5%. You still should be borrowing that money, absolutely, and taking it and letting it grow for the next 30 years, right? So like I'm a big fan of still securing cheap debt while you can. And I still think that in a year after 5 rate hikes, it'll still be cheap debt.
Okay.
Right? If you can get a mortgage for 2.5% and take that cash out for 30 years and do whatever you want with it, buy Bitcoin, buy stable coins and put it anywhere and earn 10%, right? Literally free money. Your house is free and you come out on top. Literally free money. Do that. And every year that passes, your mortgage payment becomes increasingly cheaper because of inflation, right? So let's say your mortgage is $2,000 today on a $500,000 property, something like that, even less. Maybe it's a $700,000 property and you took $500 out on it, something like that. Your mortgage, let's call your mortgage payment $2,000. Do you think that the value of $2,000 today is the same as the value of $2,000 in 30 years? No. So you lock in that debt hardcore, regardless of the interest rate. They're all low interest rates. Like I said, you can put that money, you have $500,000 basically to be very easy to make a lot of money. That's what rich people do, right? So as much as people say being in debt is bad, you take advantage of it. So I would say you take a macro approach to it, which is if you really think it's going to get much higher, you just secure in as much like low interest debt as you can. But understand that even if they hike it, then we're going to see still extremely low rates. And also importantly, if we see stocks crash because of that, it shows you how weak the economy is. Obviously, that stocks are completely just inflated and supported by the floor provided by the Fed. But this is going to all change. You can't tell me if stocks drop 25% that the Fed's not going to all of a sudden talk about how the economy is weak and they're not going to hike rates. Right? And then we get the opposite play. So like, listen to what they're saying. You don't fade the Fed, right? It's a very famous comment. And in crypto, most people are young, right? I'm in my 40s. Don't fight the Fed. Don't fade the Fed, whichever one. Don't fight the Fed always meant don't short the market because they're printing money. But it also works the other way, right? Don't buy everything if they're literally telling you that they're going to put downward pressure, right? Quantitative tightening instead of easing. So that will play the other way for a while. But I believe that Bitcoin will come out much stronger. Get your cheap debt.
Yeah, this is actually quite an interesting approach, to be honest. I mean, I'm personally not necessarily the biggest fan of any debts whatsoever, because perhaps that's the way that it looks in Poland, that it doesn't necessarily look encouraging over changing debt conditions, like conditioning. If you take it take out a loan, then like many people were victims in Poland as well to some like speculation attacks, as you had, for example, with the Swiss franc, right? And there were many people. This might not necessarily be, this may be just local, right, thing, but like there was a time a couple of years ago when all the TV specialists, like all the Jim Crimers of Poland, let's say, were speaking and shouting kind of like transition your debt, make it a Swiss franc, right? And then Swiss franc, the like literally a month after, it actually just soared like 100% against Polish currency, and the debt the debt eventually that you had to pay was still valued in the Swiss franc, so you had to pay the same amount despite the currency actually doubled in price. So
Yeah,
you ended
there's
up having
yeah,
twice as much.
yeah, there are
Yeah,
very strong caveats to that, right? This is for me. These debts are like these payments are a glitch for me, right? They're a blip on my screen. It doesn't matter. I wouldn't say take everything you have, go into heavy debt, and if you lose your job, you can't make your payment. That's
yeah,
stupid. You're right.
yeah.
It's all about your financial situation. And I also wouldn't say go put it in the Swiss franc, right? Like if you like, I would say it's very safe to go put your money on a secure platform in stable coins. And as long as your yield is higher than your interest rate,
Mm.
you're literally making money. It's very, very simple. That's not something that used to exist. That exists now. Bitcoin's even riskier than that, to be quite honest. Right. And we love the Michael Saylors. We cheer them, the Teslas of the world. And I believe in it. But Bitcoin, as you can see, can have extreme volatility. If you want to be really safe, just buy something that's going up predictably 7, 8, 9, 10% a year. Your debt is 2.5, 3%. Free money. You just have to have somewhere to
Yeah.
park it. Yes, if you park it in a risky asset and that risky asset goes bad, and then you can't afford your debt, frankly, you've blown it.
True. Yeah. You're completely right. You're completely right. Like this is, this is why I said, it's not even perhaps surprising to me, that you're talking about the debt because it's not really cheap right now, right? So this doesn't really come out as a surprise. Well, still, again, like locally in Poland, you wouldn't be so sure because, of course, that the banks eventually, no matter how you look at it, are not really your friends. They're, if
Yeah.
anything, they are your enemies per se, right? They are there to make money off of you rather than the other way around. So while the debt is cheap, I perfectly love how you kind of like just focus there for like especially on the hard assets. Hard assets is something that I personally have been extremely um, passionate about, right? And for everybody who's actually perhaps not familiar with what hard assets are, this is one of the explanations coming from John Murphy's beautiful books about intermarket analysis and how he differentiates between soft assets that are usually associated with paper assets, as in bonds or even like stocks in general, like whatever that is a paper, whatever that is some sort of like an contractual like paper, right? Options, derivatives, whatever. It doesn't necessarily resist inflation when it hits, as opposed to hard assets, which are just, for instance, metals or just like Scott said, beautiful, the lands or any sort of like commodities, right? So, talking a little bit about the hard assets and this land part, I personally think, and I'd love you, Scott, for you to refer to that in a second, how you think. The way I look at it is that, first of all, of course, portfolio diversification fixes your overall exposure towards different asset classes and as a whole builds your health as an investor, right? As a portfolio manager. But then when inflation is, well, you can already deny that, right? Nobody can even deny that anymore because even Fed cannot deny that, despite they were saying it was transitionary, but it's really not. And we are talking about the numbers that are staggering. We are talking about, well, 6, 7, 8% in Poland. It was 8.5, 8.6% in December, so it's even wilder. And this is the actual threshold that you have to fight as an investor in order to even break even, right, on your cash or even on any of your investments. And it seems that there is an overall run that is accelerating and there is actually hitting up for the hard assets as an actual store of value, just like you said, gold,
Yeah.
silver, like even the lands, real estate. What is your take on that? Is it something that you share the same opinion on?
Yeah, I think that that stuff's in a bubble too, but when you buy hard assets, it's for 30, 40, 50 years, not for 3 years. So you're still aware that you could possibly be down on them for quite a long time, but they will eventually go up. You're seeing it, I mean, listen, some of it's supply chain related otherwise, but like any luxury goods, cars, all the never in my life did I ever imagine I could buy a car, drive it for 3 years, put 30,000 miles on it and sell it back for 20% more than I bought it for
Hmm.
ever in history. If that shows you how insane this sort of asset bubble is right now, right? Patek Philippe watch that retails at $59,000 selling for $400,000 or $500,000. That's a bubble, right? And I'm not saying that like people shouldn't buy watches. I'm not saying they're not valued, but you still, like anything in the world, you have to buy the right ones, right? Rolex won't lose its value, but there's a lot of watches that will, right? That are very nice. Listen, I know you have an Audemars, you know, like they're beautiful.
How do you know that?
I've seen it, you know. I know you have an AP. They're beautiful. Historically, they don't hold their value as well as Rolexes or Pateks, but you buy one because you love it, right? I'm not saying you only buy watches as investments, by the way, right? But there are a few. So like you can buy land, but it's got to be the right land. You can buy a car, but it's got to be the right car, right? And so there's all these things that you can purchase, but hard assets, because of inflation, are in a massive bubble, right? And so again, it comes back to your time frame. Like, I'm not buying land to flip it in 5 years, right? I'm buying land because, first of all, I live in Florida, and in Florida there's something called an agricultural exemption. So if you buy land here and you either put like a certain amount of animals on it, it's very few, it's like 2 cows, right? Or you allow them to cultivate hay, or you plant pine trees, you pay no property taxes or minimal.
Whoa.
Right? I'm talking about like $100 a year.
Can I move in? You just let me.
I don't know, like $100 a year. You can't live on it, right? And if you do live on it, it's broken down a percentage of it. That's whatever. But if you're just buying raw land and you're willing to hold it, there's no carry. It costs you nothing to own, right? Okay. Not only does it cost you nothing to own, you can actually like sell the trees or the hay, right? And so it generally evens out. So like, yeah, I'm buying land and not paying property taxes on it because I'm using it under an agricultural exemption. So even if it goes down, it's costing me nothing on a day-to-day basis to own it. And I can like go out there with a 4-wheeler every once in a while and rip around it and have a good time, you know? And so to me, that when you have, it's a big difference if you're paying $20,000 a year in property taxes or nothing on whether that's a worthy investment. So you have to consider, I think, all of the options. But I think real estate is massively overinflated. Right.
True.
We're still, and honestly, one thing I was dead wrong about when COVID hit. I thought the real estate market was going to absolutely crash, and it's absolutely ripped. But the caveat there is that I didn't know that they were going to print 40% of the historical money supply in 18 months when I made those sort of predictions. Right. And so, but yeah, I agree with you. I think that you have to be very careful about what you buy right now, but whatever it is, it's probably better than dollars. Right.
Yeah. Listen, I mean, first of all, I really envy in a positive way, you know, what you guys have out there in the regulatory way in the Florida. I mean, this is pretty wild. In Poland, of course, it's completely the other way around. Like, the government simply wants you to fail, no matter what the ruling governing party is, actually leftist or rightist, doesn't matter. And eventually, you know, we are coming to a point that, again, that if you remember, like, well, there was the case in during the Great Depression, 1929 up to 32, that when there was this deflationary kind of like bubble that burst, that in my opinion, in my belief, may some sort of like repeat with perhaps even a bigger burst or blow off in the matter of 5, 6, 7 years. This brings many questions in terms of what to own, what kind of like assets to own. We've briefly talked about, talked through the equities. We've briefly talked through for cryptos, of course, some hard assets. But if there is any specific plan or strategy, Scott, that you are personally taking, let's say starting off for 2022, like your personal strategy for 2022, do you have anything to share on top of that you?
I mean, I think I have that very general strategy, and it's not specific to the year, of course. But to your point, and nobody in crypto wants to hear this, the answer to your question, if that happens, is that you want to have a lot of dollars, right? Nobody in crypto wants to hear that. And so like, and especially in like 2017, 2018, you wanted to sell, take profit on your crypto, but it was so painful because you probably had this like misdirected fundamental belief that the dollar was going to die, which is not going to happen. Right. And so you didn't want to take profit. But now you can buy stable coins, like I said, and get 10% on them in a relatively secure environment. If you can earn 10% on your dollars while everything else is crashing, you're insanely increasing your buying power. The people who made it out of the Great Depression were the ones who were sitting in cash and bought everything that wasn't nailed down all the way down, right? If we go full deflation, which by the way, that's what the government's worried about, right? They'll pretend they're worried about
Always.
inflation, but it's
Always.
deflation, right? Because that's the depression, no jobs, great reset, value, prices of things go down to zero. Now, some would argue that if they had just let that happen in 2008, instead of propping everything up, that we'd be in a much better position than we are today. And I think that's probably true. I think it would have been way more pain, but 10 years later, and listen, people would have it would have been horrible. But 10 years later, you would have been better off with sort of a great reset. And the longer you wait, the worse that reset is inevitably going to be, right?
True. Snowball.
Yeah. But if you look back at any deflationary period, if you had cash and you could buy things for pennies on the dollar, and 20 years later, you're the richest person in the neighborhood, right? And so I would say if you're particularly concerned about that, I would start to actually add a little cash to your portfolio, especially if you can park it somewhere in USDC and earn interest. Listen, this traditionally, if you can even buy a 2% bond, it's only 2%, but if you're in deflationary environment, you're absolutely crushing it, right? Because you're making money on your cash. If you can make money on your cash and cash is becoming more valuable relative to assets in a depression or deflationary environment, that's actually what you want to do. Right now, we're talking about inflation. I don't really know what happens. There's a lot of conjecture as to what would happen to Bitcoin in a deflationary environment. I don't really know, right? I don't think there's enough history for me to guess, but I would want to have a lot of cash on hand.
Okay. Do you think, because again, one thing is the focus for 2022. Of course, I also partially mentioned, the overall potential, again, deflationary risks in a matter of 5, 6, 7 years. Well, this is my personal opinion. This definitely is going to impact Bitcoin and entire crypto as a whole. But focusing on 2022 again, is there some sort of a specific, I should say, evaluation from your end that, for example, the first half is going to be more bullish, the second half is going to be a proper bear market, for example, or the other way around? Do you have any thoughts to, while we are nearing the end of the podcast, perhaps to share?
Yeah, I think right now we're in a pretty clear local, depending on your time frame, where things are bearish, right? And so I think that perhaps we need some sort of catalyst, whether that's the reason or not. We need a reason for the whales to pump the price and get retail on board with some sort of news story that actually has nothing to do with the fact that the whales are pumping price, right? We know how this happens. It's not the news that does it. It's that they use the news to get people on board with the price move and get them scared and get them greedy. So I can't tell you what that is. I would have thought a spot ETF would have done it, but that didn't happen. And a futures ETF is kind of crappy. But what I do think maybe is more important than defining where we're going to be at in the market at what time is sort of defining the narratives of the year, right? And so each year, even when Bitcoin was kind of terrible over the last few years, there have now been sort of classes within crypto that have done well, right? So we had the DeFi summer and 2020, whatever. NFTs in 2021 were somewhat oblivious to the bear market of the summer, apparently. And now, obviously, we have the metaverse narrative, right? And so I'm not saying that means go buy mana or sand right now, but I think generally focusing on the areas where the entire world is clearly focused. Facebook goes all in on the metaverse, literally rebranded one of the biggest companies in the world. Walmart announces that they're going to go all in on the metaverse. Microsoft buys Activision for $70 billion, which is 45% over the share price, just to get more access to play to earn gaming and to the metaverse. Insane. You have to have some exposure to that in some way, shape, or form, right? If we're talking specifically about crypto, I think that one of the big narratives of 2022, if we consider to see more mainstream adoption, and I'm not talking about mainstream adoption of Bitcoin, I'm talking about mainstream adoption of the technology, right? Because if we're being honest with ourselves, not a single one of these blockchains can scale to mainstream adoption. They're not fast enough. They're not secure enough. They're too glitchy. They can't do it. That's not a problem. That's an opportunity. right? So I think one of the huge narratives will be layer twos, roll-ups, ZK snarks, anything that makes Ethereum or these other layer ones faster is something you might want to consider an investment in, right? Um, Anything that can bring blockchain to scale. We love to talk about 1 billion people being in crypto, but how the hell are those people going to transact on anything that we have right now? Right? They can't. Kind of like the early MP3 days when you could put like 13 songs on your MP3 player and you thought it was amazing,
Yeah.
And so I think, and I think we'll see some pretty big waves in decentralization in general, social media, decentralized social media, things like that. So I think it's important to just sort of pick what things you think, what baskets might be compelling this year. I've talked about this a lot lately, but it's worth reiterating because I don't think people really remember. August of 2020, August or September, MicroStrategy bought Bitcoin, right? Michael Saylor was the hero. And all we were talking about at the turn of the year in 2021 was Bitcoin. Who's going to buy it next? International adoption, nations, corporations, companies. Tesla bought Bitcoin, sent price flying up to the 60,000s. Since then, nothing.
True.
Right? Nothing from companies. That's largely because of GAAP accounting laws in the United States and the way they have to report it. But companies have not gone all in on crypto, Bitcoin, like we assumed. We had this momentum. El Salvador, of course, was huge. Maybe Tonga does it, but we haven't seen mass adoption on international level. The money we expected to come into crypto for years through Bitcoin has come in through venture capital into Web3. And that's just a fact, right? People, institutional money right now, wisely, is a hell of a lot more interested in owning the picks and shovels than they are in owning the coins. They care more about owning the exchange than what's being traded on it, right? And so I think that as we see, Andreessen Horowitz is raising another $4.5 billion fund right now. Someone just left Andreessen Horowitz and she just raised $1 billion on her own, right? There's an insane amount of money coming into crypto, but it's coming in to these other layer ones and to these baskets I talked about, the NFT space, the metaverse space, all of that. So listen, Bitcoin can be its own thing. I never understood maximalism, right? You can love gold and think it's a store of value and it's amazing, but also buy Amazon because you think it's a great tech company.
True.
Right? So why can't you buy Bitcoin and buy Ethereum? They have nothing to do with one another. Right? So the maximalism side of it is so stupid. So you can hold your Bitcoin as a store of value, and you can even hope that DeFi will be built on Bitcoin and all these things. It's possible. But that should not prevent you from getting out of your tunnel and saying completely opposite of Bitcoin and having nothing to do with it. Say that to yourself. I'm not cheating on Bitcoin. I'm not cheating on my wife. You can go invest in these other things because they're great opportunities. You can't have everything in one investment.
That's something that yeah, I wish many more people actually had similar approach to the on the investment side, perhaps, rather than short-term kind of like view and focus. Perhaps the word would be a better place, would have been a better place today if that had happened. Scott, listen, I think this has been quite an amazing discussion so far throughout this reactivated podcast, the Nestro podcast, everybody. And while we are nearing and closing out, I would love perhaps to give you a very quick minute to share some final tip and conclusion for the listeners, if that is fine with you.
Yeah, I think that's very easy for me because it's the same tip that people need all the time. You probably shouldn't trade. But if you are, please, for God's sakes, always have a plan and never believe that your liquidation price is your stop loss. That's one. Okay, because I constantly see people saying they got liquidated, and I don't understand how you get liquidated. You can set a stop loss literally anywhere above your liquidation and not get liquidated. So you should always know exactly what you're buying and why you're buying it, whether it's a trade or an investment. But the most important thing is just to zoom out and chill, right? And there's a reason that these same meme statements that people make about investing are said over generations because they're actually true, right? Like, don't invest money you can't afford to lose. Nobody can afford to lose their money. Let's be real. But the point being, if you're going to put something into an investment, right? If you bought Bitcoin at 60,000, for example, if you bought Bitcoin at $60,000 and you believed I'm going to hold this for 10 years or 20 years. It's a retirement fund for my kids. But right now you're thinking of selling it because of the price, even though nothing has fundamentally changed, you're doing it wrong, right?
True.
If you bought something for a reason, that reason doesn't change with the price. The value doesn't change with the price. If there's something fundamentally that changes about it, like all of a sudden the Fed becomes responsible and they don't print money and Bitcoin is not important to you, then sure. So to me, I think it's just insanely important to not overthink it, dollar cost average, plan on the long term, don't make impulsive decisions, and really try to only put in the money that you can afford, not necessarily afford to lose, but you can afford to park there for a very, very long time.
Truly, truly, I fully agree, and I also send and fully kind of like back, this the suggestions and tips that Scott Melker, our today's guest for the next show podcast after a long break, after a long period. The Scott the Scott's suggestions, everybody. I think this may literally save your ass. So get your get to work. Make sure you follow Scott Melker on Twitter. Everything that Scott shares on a daily basis via the newsletter, via the podcast, via his beautiful brand that he's built entirely. I think this is amazing, ladies and gentlemen. One more time, thank you thank you for listening, and thank you, Scott, for coming over to the show. It's been a pleasure.
Thank you, Barb.